Welcome to another Coffee with Samso. We're here at the University Club here in Crawley on the University of Western Australia campus. And we've got Riversgold with us here today. Julian Ford is the CEO and their ticker is RGL. Market cap currently is approximately 14 million. Julian, welcome back.
Thanks, Al.
Look, Riversgold, all about lithium. I think the last time you spoke was in October with us last year. Fair bit has been happening, so maybe give us a reminder of who Riversgold is about, and then we can move on to the projects.
Sure. Last year in March we switched from gold into lithium, and we've been very active ever since. So we've made 3 acquisitions, what we call our Pilbara tenements, and then more recently we, in August last year, we farmed into Mount Holland, and then beginning of this year we announced a deal which was really a binary but into rare earths, but same thematic from a growth and high demand, and relatively underexplored in Western Australia compared to typical gold and base metals. And our exploration strategy and corporate strategy is relatively simple, right? We like to look at simple geological hypothesis. We test the hypothesis and we move on. And if you keep that relatively inexpensive, I'm talking about in relative terms, reward versus cost, we think that balances out, and that's how we can make money. So based on the success of, we had a lot of success at Tambourah last year. We raised 6.5 million, which was relatively steeply discounted at the time, but I think 15% the ongoing share price. But the board took the view, which I supported, that we should raise money now, because you don't know how long these times will last, and thank goodness for that. So we raised 6.5 million. We've also subsequently sold our Alaskan gold assets for $1 million, which we've banked, and we have also put our gold assets on the market. This is Canopy, and we have some offers, so those negotiations are ongoing. But the lithium's been so far technically a huge success for us.
As I said, since we last spoke, I can see in your announcement there's a lot of activities happening. Maybe we could go through them in steps per project and just give us an update on your thoughts.
Yeah. So I'll go in reverse chronological order in terms of where we're going to be drilling next. So we put a POW in for Mount Holland, 2 POWs in fact. Again, that's binary. We know there's pegmatites. We're right alongside the Mount Holland mine. We don't know if they were mineralized or not. We completed some geochem and some geophysics there late last year. We've just completed in the last couple of weeks, in fact the last week, a second geochem program. We completed our heritage survey last week and got an all clear. So we'll start drilling there as soon as that POW is approved, probably within a couple of weeks' time. And again, that's binary. If we find something there, it'll be very, very exciting. We have 2 or 3 targets. We'll fine-tune those as soon as the results of the latest geochem coming. So that's Mount Holland. If we find something there, it's literally a stone's throw from the Mount Holland mill. We'll see.
Exit's easy for you guys then.
Well, it is and it isn't, because Mount Holland's a big project, got a long mine life, but the mineralogy and the geology is well understood. And you're sitting right next to a mill. At some stage it's going to be worth a lot of money. Mount Weld, again, an opportunity came up. We missed it. I didn't have the money in when it first came up in October. By December we'd raised the money, so I negotiated a farm-in deal. So we'll spend $100,000 minimum. We'll spend $500,000 to earn 50%. So again, this is a couple of kilometres away from Mount Weld. It's a bullseye magnetic target. We did ground mag over the area, refined the targets at the beginning of the year. We put a POW in about a week ago, and I expect that'll take maybe another couple of weeks. We've gone out to tender with drill rigs and obviously drilling companies. The prices, people have been sharpening their pencils, so the good news about the markets at the moment is that drill rigs are available, and the quality of the drillers and drill jockey geologists are more readily available than they were this time last year. So that, again, that's binary. Who knows what it'll be, but if it is a carbonatite rare earth, we're off to the races. It's next to, a monster, the world's largest rare earth deposit, a couple of kilometres away. Never been drilled before. It's under about 80 metres of transported cover sand. And so, it's not really deep drilling. Mount Weld, you may be familiar, actually outcrops, right? So that's kind of a no-brainer, whereas this sitting just west of it is undercover.
Do you see any similarities in the...
At Mount Weld, it's a geophysical target, absolute ball terror. Just sits out there, and that's what we're drilling. I think we've got 2,000 metres planned, so what's that, 10 holes for 200 metres each nominally. So the plan is we'll be intersecting the targets at about 80 to 100 metres. We drill 100 metres into them. Carbonatites are quite layered and complex, right, in terms of the different RE rare earths and in fact the iron oxide as well. And so we should know where we sat with that by the end of the second quarter of this year. And then coming back obviously to our lead project, or Tambourah. So we did a maiden drill program there last year. Our hypothesis we tested all worked out pretty well. So the three things we really wanted to test was, we had good outcrop at surface. We defined it from mapping and from geophysics, which was ground penetrating radar. And then we had a whole bunch of blind anomalies which we'd found with ground penetrating radar, but that didn't outcrop at surface. So three things we were testing was, while we saw 0.5 metre outcrop at surface, or sometimes 30 centimetres, the ground penetrating radar said these pegmatites were much wider at depth. So I think they averaged about 7 metres width, or median I should say. Biggest I think was 21 metres, and our biggest intersection was 30 metres with spodumene, right? It was only, I think we had one intersection at 0.9 or 1%, and our best intersection was probably 14 metres at 0.7% spodumene. Probably economic in this market, but really, where the existing operators are mining at 1.2% lithium, you got to remember all those mine plans were developed when the spodumene price was $500 to $750 a ton for spodumene concentrate. That's selling at $6,000 a ton still, right? So, we're probably in economic grade, but the LCT model, which is what we're chasing, is very well understood. And so, as I mentioned, the third hypothesis was that we would find spodumene at depth. Right? So we didn't see any spodumene in our map samples at surface, but because of the chemistry, we knew this should be a spodumene-rich environment. The spodumene we know is far more, it will weather and disappear from surface. The lepidolite won't. So when we drilled and we found spodumene at depth, that was fantastic. So the good news now is we know that we're probably 1 to 2 kilometres too close to granite. And so now we need to look away from the granites. And we've done a lot of work, and we still continue. We got our results back from Geochem. That was a function of the problems we had in the industry last year. The specific laboratory said they'd turn those samples around in 4 weeks. Well, that took 5 months, right? It was an absolute disaster. So we switched laboratory since, and we've gone to a new laboratory turning it around in 4 weeks, which is fantastic. But when we got the results back, and we're still going through them, so we really understand now the mineralogy. And in fact, we start today in partnership with Infinity a passive seismic program. That is far better definition. While the ground penetrating radar only went down to probably 80, 100 metres, the passive seismic will probably go down to about 200 to 400 metres below surface. And so we just now need to work out where to drill this year. And so, hey, it's a big system. We know there's lots of lithium in the system because we're seeing a halo around these lithium halo around these pegmatites, which but we're not seeing the grade of spodumene, but we're seeing microcline, and all the mineralogy tells us, we're in the right system. We just need to look a little further away.
It's interesting listening to you talk about that, because the exploration lithium products or deposits are very few and far between, because people have not needed to explore the way you are. You're trying to find it, whereas most of the ones we hear, they're outcropping and they're just following the vein down, and they're almost drilling where they know where it exists, where you guys are trying to find it, which is interesting, because we spoke about this earlier on in our previous conversations, that it's very young in what you got. What this industry, the lithium exploration, is still fairly young. When you say that you're 1 or 2 kilometers too close to the granite, have you done stuff away from the granite, giving you a bit more confidence, or this is a understanding of the system that maybe the fractionation and the dumping out of spodumene would be needed to be further away from the heat source?
As you say, this is a hypothesis. I think realistically, given what we can see, we've tracked the lepidolite at surface in the pegmatites all the way from the young granite intrusion into old granite into the greenstones. We've then followed that for a couple of 100 meters, and then it disappears undercover. Right? The ground penetrating radar said, well, actually it doesn't disappear, it continues undercover. It's just the mineral, the spodumene, which is a pyroxene, which is more susceptible to weathering. It's no longer visible at surface. So that's a hypothesis. We've tested that. Okay. So now we really need to look at the trap sites where we should see much larger concentrations of spodumene. Right. So we're now using geophysics to a large extent to both find those differentiation and to find the structural. And the theory is that you're probably likely to find the large spodumene alongside gold. Right? And you see that obviously at Mount Holland, you see that at Mount Ida. While they're separate events, the plumbing's the same. Right? When I'm saying events, I'm talking in time, right? The plumbing's the same. Fortunately, where we are, there's a whole bunch of historical gold mines. But we see very little outcrop of lithium there. But I'm sure once we drill below the surface, and there's very little regolith development there, right? It's almost fresh rock at surface because the greenstones there have been scraped clean. This is very, very old geology. So I think, in terms of theory, this will be, and we are doing some fundamental groundbreaking research, which we hope by the end of this season will allow us to more accurately target exactly where to drill in the sequence to find what they call the Goldilocks zone.
I guess it's a good time to say, to bring in this question. Investors out there really are learning. Like you said, what the Pilbara's PLS is doing 1.1%, and they say, oh, that's economic great, but because the price has gone up significantly, 0.7 could be on the money, or lower could be on the money. So can you just give us a narrative of what what you think investors should look at as a parameter for grade, size, to make something economical?
I think because the nature of these hard rock LCT lithium, you're probably going to get, because the mineralogy and the fractionation, you should be getting, I'm talking spodumene now, you should average around 1%, right? That's just what it fractionates and comes out at. What you then obviously need, which are determined your modifying factors according to the JORC code, will be, depth, width, and size and mining conditions, which will determine the cost of extraction. So I think grade-wise, naturally it's going to be about 1 to 2%. You're seeing some freaks at the moment. There's in Canada, big systems, a bit like Greenbushes, right, which is a statistical anomaly, right? It's a freak where you're getting 2%. But I think 1 to 2%, probably close to the 1%, is where we'll end up in Western Australia, and it's very, very economic at current prices.
your thoughts on the current status of the lithium market. Obviously, the market's going through a bit of a turmoil, but we spoke before we started recording about the difference between now and say 2015, when everything was literally pointing south. What is that lithium market for guys out there to understand?
So 20 years ago, I was marketing lead, zinc, and copper concentrates, and that relationship between the miner, the smelter, and the market is no different in the hard rock lithium market, right? You got the people that produce the concentrate, you got the processors, and then you got the market, and not a lot of vertical integration. We're seeing that's starting to happen here now in Western Australia. A lot of the volatility people are talking about is that interplay between supply and demand, between the spodumene producers and the processors, who are separate from each other, and the market. But the ultimate market price is going to move around a bit, but it's extraordinarily high at the moment. I mean, we're talking margins 10 times what you would normally expect in an average commodity business, right? So my view is, when you get prices that high, you're going to get a lot of volatility. But this supply deficit ain't going to be solved for 5-10 years. It's just, the demand is that strong. And we'll see a lot of volatility around the top end as the profitability, switches between the miner and the processor.
When I look at this lithium market, and part of me says, yes, bullish. I can't see pricing really tanking. If it's harder to find, the price is just going to keep going up. Then you got the brine guys who, if they turn it on, but maybe my view is that maybe it will cost more than what people think, hence that will make the price sort of not drop and things like that. Then there's the group of guys talking about the alternative to lithium batteries. Can you give your thoughts on that?
I think in the mobility market, where energy density is key, you're never going to substitute for lithium, right? So around the cathodes, yes, there's a lot of alternatives, but when you look at all these new batteries and they don't use lithium in the name, actually the electrolyte's still lithium. So they all use lithium. It's just what density of lithium, in terms of per kilowatt hour output they use. You have seen a lot of lithium used in stationary batteries, right? I think long term there's a threat of substitution because of the price of lithium. Naturally, when the price goes up, people look for alternatives. But in the mobility market, nothing will ever match lithium because of where it sits in the periodic table. Simple. It's one down from hydrogen. It's number 3. Nothing else comes close. So lithium will always have a major density of use in mobility batteries. So I think the people that say that don't understand chemistry or physics.
Oh, that's me.
Yeah.
Riversgold is an exploration company. You got cash in the bank. You got good management. We spoke early on about your exploration thoughts of, and where you think things are. How should investors look at you guys? How should they place themselves? Because the next statement be, there's dime a dozen of these guys and they're all talking about the same thing. How should they view Riversgold, in your opinion?
Yeah, I think, we can't change the markets, right? Markets go up and down. The good news for us is, we're well cashed up for the next 1-2 years, right? So to a large extent, the market can go up and down, and I feel sorry for investors that bought at 2 or 3 times the current price, right? If they need to get out. But the fundamentals in terms of every dollar you spend, what's the probability of success? And if you are successful, what does it mean? Even though we're seeing this disjointed market, in the last 6 months, there's been a lot of corporate activity. We've seen IGO, SQM, a whole bunch of acquisitions in Western Australia of, even small resources, 10 million tonnes, right? It's sub 1%. Lithium, which shows you, that's a 10-bagger or something for the explorer that's been successful. So that's the business we're in. Very, very simple, right? If we are successful, how much are we going to make for every dollar spent? And the answer is probably 10 to 100 times in this market, right? So all we can really focus is on how effectively we spend our money. And in this market, you look after your money a lot. The good news is for people like us who are cashed up, we get better quality drillers and better quality geologists for a lower price. And we don't have to wait. We can pretty much pick and choose and plug them into our project schedule that suits us, not whatever we can get. So actually, counterintuitively, in this market, as it currently is for a cashed up explorer like us who has a very simple exploration hypothesis, it actually makes my job as a CEO a lot easier.
Look, I think that's the best summary you could give, because a lot of people don't understand that we measure success in our industry really in years, and then ultimate success in decades, not days and weeks when the bull run's happening, because everyone expects that. And I think this is the best time, because we have limited cash, we don't have income, but it's a lot more economical for companies like yourself to spend at this period of time.
Absolutely. So if you're in a fortunate position that's raised money at the right price at the right time, our ability to execute and the efficiency of getting bang for your buck in this market is a hell of a lot better than it was a year ago. It's tough for the punters, right? Who've seen their short-term investors, but for long investors and fundamental investors, actually this is a great time.
I think we're not saying you should invest now, but every story could end well and every story could end not well.
Yeah, that's the nature of the beast.
That's
right?
the nature of the beast.
And you make 10 to 20 baggers, but what I will say is when the price is high, you're probably looking at a 5-bagger. If the company you're investing in is successful. At current prices, you're probably looking at a 20, 30-bagger, right?
Yeah.
If they're successful.
Yeah. I've decided I'm going to have a segment called the Devil's Advocate segment, which just give us an idea of the negatives, I suppose, and your thoughts on the comments. First up, investors looks at Riversgold and say, you got a lot of meat, you got a lot of projects, where you're going to spend your money. What's your comment on that?
Well, I think we've been pretty disciplined about getting rid of non-core projects for cash. And, we've demonstrated the sale of the Alaskan asset. We're on that project, and our plan is readily simple, right? We want simple exploration hypothesis that's preferably binary. We get on the ground early, we drill, and then we move on. We've got a good project stream of opportunities because of the network we have of invested both directors and non-directing major shareholders. So that, that's a simple. The negative, and I'll move on here, for WA, I think, is that this state is becoming a lot more difficult to exploit. The two big green and red tape issues are occupational health and safety, and I think we're in the right direction, but I think we're over-egging things. Actually how you prevent accidents and things is primarily by having experienced, good, sensible people. And I think we're starting to lose the aim of how we go about that. I do understand that we have to make progress, but the legislation that's come out in the state at the moment in the last year is, I think, over the top. And then the last one is, for native title and heritage. It's tough right now because we're transitioning to a new act, but I'm not seeing we're going to have to go through a lot of dramas till we get to where places like Queensland are, where I've explored and done business who have had much tougher heritage acts, but at least the rules are set and you know how to go about business. At the moment, it's just tough because nobody really knows how it's going to work, and there's a lot of projects stalled. Our principal project, we can't drill at the moment. And in previous times, and I guess in 5 years' time, in my opinion, that shouldn't be an issue. But at the moment, it's stalled. And that's not going to change, I don't see, for the next few years.
I think that's a very important point. there's just too many one-man shows holding up stuff, and but we could go on forever on this
Sure.
topic. The other thing is, we talked about how you guys are going about your business in discovering, and people are saying, oh, look, by the time you guys find this, lithium will be replaced. What's the comeback on that?
Look, I'm a chemical engineer, and other than running exploration companies, my experience has been either fixing and or developing new projects, right? Hydrometallurgy, physical beneficiation, whatever. What people promise and the actuals in terms of delivery and the ramp-up curves, this supply deficit's here for, in my opinion, 5 to 10 years. And that certainly fits well within our discovery and development time horizon.
Before you were mentioning, the TNC guys with the mill, with the plant that they've got, and the ramp up as they move forward. Do you think that could be a stimulus to say that that the whole lithium market will be here longer than most people would think?
I think so. I mean, this transition to EV in terms of cars principally, and to a less extent medium and heavy vehicles. I mean, this is a massive, once in 100-year shift, and to switch primarily from oil to batteries and hydrogen, is an alternative, but there's a lot more barriers to entry in terms of infrastructure and development. So the world's certainly in the next 10 to 20 years has decided it's going with EV, electric vehicle, lithium-ion batteries. And while everyone talks about all these other types of batteries, just mentioning again, they always contain lithium, and in very large quantities because of the nature of the beast.
Yeah.
So I think it's, we're 5 to 10 years minimum.
Okay. News flow. What's the news flow for you guys going forward?
Well, we got 2 drill programs, Mount Holland and Mount Weld, in the next 6 weeks. As I mentioned, we've started new geophysics, and we get into the field next week up in the Pilbara. News flow in terms of drilling won't really come through till the end of this year. So, we're a very active program, and we'd like to have drill programs, north, middle and south of the country, so we're not adversely affected by weather conditions which may or may not happen. We've actually had a very, very good cyclone season up in the Pilbara, not necessarily from a rainfall in the Kimberley, but it's been a good year and it's nearly over. Always wait till Easter before I say the cyclone season's over.
I don't think we've had one yet, have we?
Not in the Pilbara, no.
Yeah. Well, I hope I didn't jinx it.
Yeah.
Typically, why RGL?
I guess the most important thing is that we've got some really exciting drill targets, and we're not going to dilute the shares by having to raise money in this market. And that ain't going to change for the next 12 months. And for the junior investors out there, the mum and dad investors, I'm not talking about institutional investors, that's a really long time horizon. And fortunately for us, we are very liquid, which has been unfortunate because every time we put out good news, the volume goes up and the share price goes down, because we're probably in many cases one of the only liquid stocks around. But long term, I don't see that as being a problem. It's obviously why people are attracted and why people are prepared to put money in, because they know they can get it out.
I think it's pertinent to mention the fact that although this market's really not well, it's actually the opposite of 2015, where the market was, everyone was going down and the market was, you couldn't raise money, but commodity prices are still up there, and we're really hamstrung by the banking issues and the rising interest rates, which if you hear one narrative is that it's around the corner or not. I think there's the hiatus we're watching. I see it as a good time for me to position myself with the thing, because the dynamics are different. It feels like you can't raise money, but the market is high.
You're absolutely right. This is different. This is not driven by pricing. The fundamentals of our business have probably never been better. What is bad is it's a financial interest rate inflation driven crisis and a confidence crisis rather than the fundamentals of the business we're in, which is about exploring, discovering, and then profiting by mines. I mean, if you look now, the majors are all really, really short of reserves and resources. And so
That's
I think
right.
what you'll see in this market is a massive M&A campaign from the majors. So rather than, dividend buybacks or share buyback schemes or, increasing dividends, they'll be looking to run their ruler over explorers. And so I think if you find something good, the chances are you'll be bid for very, very quickly.
I think that's the hidden value that people don't see, is that we are still in that transition period. We haven't really put a dent into going from hydrocarbon cars to electric cars or energy with full of emission and no emission, right? We haven't even put a dent in that movement.
No.
And I think that when the guys who are, like you said, the M&A, it's an opportune time for them to pick up stuff that are good.
Yeah.
Right? But look, Julian, fantastic. It's a good update from where you guys are. Always a good conversation with you.
Thank you.
Typically, you know all about the coffee giveaway for you. We've added the bag to add value.
Thank you.
For you to put your coffees in. But thank you, and hope we continue to follow your journey.
Thanks very much. Appreciate the time always.
All right, ta.